Hey guys, Dylan Weston here. Today in this video, I wanted to share with you my thoughts and opinions on the market and why I think this time is going to be different. So I believe it's going to be different in terms of finding a bottom on high risk assets such as Bitcoin. And I know every time investors say, hey, this time is going to be different, it's usually their last famous words and they get wiped clean and you never hear from them ever again. So please bear with me. I've got 3 key points that I want to go over. And by the end of the video, I think you'll be able to at least understand my point of view, and you may even see eye to eye with me. So to begin, let's take a look at the last 10 years of Bitcoin. As we can see, there's been 3 major corrections. We're calling them bust 1, 2, and we're in the 3rd one right now as we speak. They have been roughly 80% corrections, but if we check exactly the first one, it's 87%. The second one is 84, and we're in the 3rd one right now, but so far it is 73. So we can see a trend there. Over time, these corrections are getting smaller, 87 to 84. And, it would make sense that the 3rd one may be, 80% or maybe a little bit smaller than that, because it does make sense that over time, if an asset is growing, then it is becoming bigger and it is becoming less risky over time. So then the corrections and the volatility should reduce, right? So let's just imagine if we were in the same economic environment as we were previously in 2018 and back here in 2015, then I believe we would be pretty damn close to the bottom with Bitcoin. And I would have a lot of confidence. Like, I would be buying the dip so hard right now. But I think what people don't understand is we've been in a global bull market for the last, more than a decade. And now it seems like that's finally coming to an end. That's only like a short-term end. I think it's, usually bear market cycles, they're only 18 months long at the maximum. So we're already 6 months through it. So worst case scenario, in my opinion, we've got about 1 more year until this comes to an end. But what we need to understand is it's our job as investors and traders is to understand the market conditions we are in. And if those market conditions change, then we need to change accordingly. A good analogy is investing and trading is quite similar to riding a motorcycle. So overall, if you don't know what you're doing, you're probably going to get hurt. But when the conditions are right and you have experience, then you should be okay, right? So when it's sunny and all of that, it's quite safe if you know what you're doing. But when the conditions change and it's really cold, it's raining, and there might even be ice on the road, it's extremely risky. So like imagine you're going downhill on like a windy mountain. You may even choose not to even ride. So I believe that's very similar to what we're experiencing in the market right now as we speak, because the market conditions are changing. If they're changing, us as investors and traders need to change and play the game accordingly. And so just like the motorcycle analogy, if we deem the conditions too risky, we don't actually have to participate. Like sometimes the best thing to do as an investor and trader is actually to do nothing, like literally sit on your hands and do nothing. So over the last 2 months, that's exactly how I've been feeling. I've been a little bit too scared to participate. And that's why I wanted to trim back my positions really hard. And eventually, like once Bitcoin broke below the support levels, I just cut everything because I don't have as much confidence this time around. And I think that's a big point. Like as you gain more experience or expertise at something, then you can see all of the nuances and you can see more of the risks compared to other people. And the bad thing about social media is it kind of makes you have this mindset of, I cannot miss out on any move. Like every single time the price of something is going up and down, up and down, up and down, they're saying that you need to profit from that move. So as it goes up, that's quite obvious. But now there's the mindset like, oh, if you're not making money in a bear market when the price is going down too, then you're not a real trader. You're not a real investor. But that's not actually how this stuff works. Like your actual goal in a bear market is to survive and not get hurt that badly. As an example, here's some mathematics to help explain. So as a percentage loss, if you experienced a 5% loss, to make that money back and to break even, you would need to make more. So you would need to make 5.26% returns just to get back to zero. Now, this gets worse as you go down. So at 10%, you need 11.11, 20%, 25. It gets really interesting down here at 50% because you literally need to make 100% returns just to break even. And if you go lower, it gets even more ridiculous. So for me, when it's a bear market, I want to have risk off. I don't want to do risky things, because if I do risky things in a bear market, it increases my probabilities that I'll fall down in this category of like 90%. Then I need to make 900%, just to break even. And like, what's the odds of me pulling that off? It's close to zero. And what we need to remember is, overall, the macro goal as an investor or trader is to beat the S&P 500 over the course of our life. And there's going to be many, many bear markets. So our goal is just to survive them, especially when we're new to the markets, because if we're coming in with a super aggressive mindset, the quote is, if we don't manage our risk, the market will manage it for us. And usually we just get wiped clean. So overall, there is a regime change. There's no doubt about it. With rising inflation and rising interest rates, these are two things that we don't want to see as investors and traders. It makes our job so much harder. Now, let's think what the smart money wants. Before, when interest rates were at extreme lows, then it was grow at all costs. And then you got things like Uber and Airbnb, where they didn't really care about money made today. They just wanted to see how fast the company can grow. But now, what do they want to see? They want to see the opposite of that. They want to see stability and cash flows. How much profit can you make now? The more you can make, then the better you are, because the stronger you are. We got to remember that money is the oxygen of a company. So to wrap it up, this is what I'm doing. Please remember, this is not financial advice. You got to do your own research, and always remember, I'm just a bald-headed dude on the internet. So what I'm doing is understanding the regime change. I can see that investors want to invest in high quality assets, and they're going down the risk curve, and they don't want to invest in the risky things anymore. So I've sold off all my risky assets. I've got like none left, especially the cryptos. I have 0% allocation to them, but I want to dollar cost average the high quality real companies that are producing a real good as hard as possible right now, because they're on a major discount. Will they go lower? Probably, but I believe we have like 1 year left to buy in as hard as possible through this dip. How low will it go? I don't know exactly, but all I know is it's way cheaper than the last couple years. So if we're looking 5 years or 10 years out into the future, I'm pretty damn sure these are going to be all in a pretty significant profit. Like, there's one common thing with all bear markets. A few years later down the track, once all the fear and all of that's gone, is like, everybody is kicking themselves in the ass thinking, why was I not buying harder? So right now, I just want to sacrifice as much as possible and get as much money into the markets and buy the high quality goods. But also at the same time, I'm prepared for the market to go down again even lower. And I position myself accordingly so I will not panic if that does happen. All right, guys, that wraps up today's video. Please like, comment, and subscribe. If you've got any questions, post them down below, and I'll see you in the next one.